Chris Marcus here with you for Arcadia Economics on Wednesday, February 24th. Certainly, there has been a lot of attention in the markets around silver in general lately, certainly with the options expiration week and a whole host of things happening. Certainly an interesting day. Unfortunately, I'm joined by my good friend John Lee of Silver Elephant, who's going to talk some silver and what he's sharing or what he's seeing. We'll also have a quick video to go through some new drill results that Silver Elephant released from their Sonawayo project. And but John, before I introduce you in, perhaps you could just remind folks of what you saw last year, because you had an interesting forecast of a silver move shortly before it went from 18 to 29. So with that said, John Lee of Silver Elephant, welcome back in, and how are you?
Well, Chris, I'm doing fine. Regarding my forecast last year, I think it's a bit bitten to the dead horse. Everybody knew, a lot of people knew that, I was calling for $32 silver back in July on Canada's Day because it was just on the fringe of breaking out. And I had a forecast of $32 an ounce by the end of last year. It did not materialize, even though the dollar index had hit almost my target of 88, reached 89. And I think it was just a lot of other forces at work to for the silver not to get to sort of my target price. And recall, Chris, you and I had a conversation, another session about a month ago, and I was quite bearish, or at least had a lot of mixed feelings about silver, and had said that I thought I didn't have a forecast, and I thought it was going to go between sort of 23 to 27 and a half. And lo and behold, it was hanging on to a very thin thread as the dollar was rebounding at around 24, and all of a sudden with the GameStop thing that took place, and propelled silver to almost $30. And now we are at the upper end of my forecast, and in fact we've broken out at 27 again, 27 and a half again.
Yeah, and given all that we've seen, again, this is the first time in my life, and certainly in 10, 12 years I've been covering silver, that I've had people telling me that they're taking delivery on the COMEX. So just not to say that that's going to be the break point and that's over, but I don't know, seems like more pressure than ever. And John, I think you might have been impressed. I had a forecast on Monday where when silver was over 28 bucks, I was looking at that 28 strike on the option board. And I was thinking, gee, we'll find out a lot where we stand the next day. And sure enough, got driven down there. What's going on beneath the surface here? I mean, you can look at the price, but I feel like there's a lot happening that you can't see from the chart. I know you study this and see it every day. So what would you say to that?
Well, Chris, all these imminent happenings, the imminence, I follow GATA at its inception back in early 2000s. And so the COMEX delivery is nothing new. It's being extensively documented. The likes of Ted Butler has been talking about it for so many years. And on the day-to-day, I can't really comment on that because silver is such a quirky market. Sometimes it leads. Sometimes it's a leading indicators, and sometimes a lagging indicators. So for a period, it could trend with oil and base metal. For a period, it could trend with Bitcoins and NASDAQ. And for some time, it could also track with gold. And for some time, it could go usually inverse to the dollar index, but sometimes it can be defiant from the dollar index. So therefore, I think you and I had a couple of conversations. The key here is for silver to decisively break out of the 27.5 level. So what I mean by decisively break out, as we mentioned a couple of times in the air, that means a weak sustained level above 27.5. So we had a great start on Monday. It took over 20, it break out of the 27.5, I think, to 28.5 at the start of the COMEX. So that's a very, very good sign. Somebody wasn't afraid of getting it on, and it was not a window dressing by the retail, even by the cartels looking to hammer at the start to maximize their short on their short covering. So I think it's a very good sign. We had a very strong follow, and then we had a follow through on Tuesday. Gold is taking a bit of a beating, so it's below 1800 or is around 1810. For silver well, my thoughts are for silver to really sort of take out 27 and a half, gold really got to take out 1850. So it's not doing that. It doesn't mean silver couldn't surpass the 27 and a half without gold taking out 1850, still possible. However, I would say, of course, as you know, that's much easier to play with the gold market than the silver market because there's just a lot more gold inventory. Every ounce of gold that's ever mined is still there, and central banks still control around 20 to 40% of all the gold above ground. So there's a lot easier. So I think cartels are getting, the power that be is getting a little bit concerned about naked shorts of silver with all the talks that's happening. But I think they have a lot more ammo in working with the gold market. And I think they're doing this as we are in wondering whether silver is going to follow suit with the gold, right? So I think there's a lot of different variables really at stake with a lot of interesting inter-market relationships happening right now.
Yeah, and John, speaking of which, here's a question I get a lot. I look at a lot. I'm curious if you'd like to take a crack at this one. You mentioned silver cartel. And here we see the price just drops. I mean, I would say the retail order flow has slowed down from the dealers, but has still been elevated and steady. We've seen mixed results in the ETFs, but is there some other? What do you make of that? We see it all the time.
Yeah, Chris. Again, on the day to day, it's very, very difficult to tell. If you look at some of the institution or technical or some of these hedge funds, right? These algos, they have PhDs and high tech computers that do all those trading for them, and a lot of them is following these intermarket relationships, Chris. So some of them say, hey, look, if gold to go down, silver, they're going to short silver, right? And so I wouldn't be surprised some of that is at work. But Chris, I thought more interesting to follow is if you look at the volume of PSLV, the Sprott Trust versus SLV, I think that's a lot more interesting talking point in that, I think on a good day now, Sprott PSLV volume is trending up and it's exceeded its prior peaks back in August, whereas SLV is still only sort of consolidating and not reaching the prior high. That means that there are sophisticated money that started to understand the difference between allocated and unallocated ETFs, and they got triggered into the first round of which they got hurt, and now if you look at a nominal dollar volume of PSLV at a good day traded 30 million shares, and that's $300 million, and that's 10 million ounce. That's not small fry. And if the volume can sustain if volume can continue on a sustained basis, I mean, you could be looking at, of course, unnecessarily, you could be looking at sort of anywhere from 30 to 50 million ounce a month of accumulation. That's a lot, Chris. I think some of the silver bucks, wow, silver didn't take off $30. Amounts to nothing. It's all much about to do nothing. It's not, Chris. A year ago, we were 14 and now we're 28, right? So the key here is what you want to watch out for, Chris, not so much on how high the markets are, but rather the lows. Are we establishing, is the market establishing higher lows? And the market's clearly doing that, right? In the days, a couple of months ago, we could see $22, $23 days. I think we can probably safely kiss those days goodbye. 200-day moving average is around 25, and that is inching up. So then you got some really hardcore physical people that are hoarding the metal. So I think that I'm becoming very positive, very bullish. And for the trend followers, even though gold is not playing silver's favor, but copper is at 420, 410. It's only 10% from all-time high, 460. 2011, oil is taking out $50, 62. Bitcoin's at 50,000. So there's a lot of tailwind going for silver. On the other side, though, it's like I tell some of the people, it's an interesting movie. The movie is getting to its climax. like the crying game, whether there's goods in the end, when the guy does the emperor has to close or not. The movie is getting the bottom, the seventh, right? You have the NASDAQ. If you look at the chart, the NASDAQ, 20-year chart NASDAQ, I mean, it's going parabolic. It's not much different from it was back in 1999. And oil, despite its terrible fundamentals, with the half-war lockdown at $60, and so a lot of, and then Bitcoin. I understand Bitcoin is about 50,000. It's a movie you definitely not want to leave, because the best part is always towards the end, but you got to be guarding the exit quite closely. I definitely think that with what we have right now, we have an excellent shot at taking out 27.5 on path to taking out 30. However, there's going to be volatilities and surprises. If there's a war or if there's some events, silver is a greed trade. It's not a fear trade. So if you get some unexpected events of geopolitics or equity market issues with the equity market, and then you see a big correction in not just gold, but in Bitcoins, in copper, in oil, then you got to lighten your position. You can never catch that top, right? It's only in hindsight. But I do think that there's quite a lot of fuel in the silver, particularly watching the PSLV, the action on that is very, very encouraging, Chris. And then not to mention, just last point about Dixie, there's going to be a bounce of 88, 89 because it's a 5-year level. And it seems to peter out. Now the dollar index is below the 50-day moving average. And with commodity, with the oil and the base metals trending up, as well as nickel, by the way, that is a bad omen for the dollar, because that means the growth currencies, the commodity currencies like the Aussie dollars, like the New Zealand dollars, and also risk. There are so these currencies is going to have strong support as base metals trend up and oil trend up. Also the Canadian dollar, for example. So therefore, the dollar's upside probably is capped. And then there's another point on geopolitics. I think there's still a bit of some disbelievers about Biden's administration, and now I think that is being settled. And I think now gradually, I'm not saying it's an epiphany moment, but gradually people are just gonna, people are just gonna see the deficit, forever going deficit, and some of the things gonna steadily come home to roost. So a lot of things are really coming together: the technical trends, the fundamentals for silver very well, the fundamental buying of that as well, and the headlines that they made from the GameStop. But what we need to see in the end, Chris, you got to see that 27.5 being taken out. So we're on path in doing that. Fingers crossed on a Friday. If silver can close above 28 by end of Friday, I think you're going to see hordes of buying next Monday's open, because that would be a very clear sign that silver is ready to go.
Well, that sounds good to me. And here's our debt clock. I want to come back to the SLV and PSLV, but while I have this up, John, do you see this number over here, the dollar to silver ratio now? I got to leave my mouse there, but if everyone looks to the top, the box on the top in the middle of white, they're defining it the year-over-year increase in U.S. M2 money supply divided by yearly world production of silver. So, John, you can tell me if you're getting the same interpretation, but they're saying how much silver is being mined now, how many dollars are being created now, and any thoughts on that? The number, just the fraction, comes out to $4,880 an ounce.
Chris,
and this is John. I'm sorry to interrupt. This is before Janet Yellen supersizes the hyperinflation.
Well, some 40% of the dollars created in the last 12 months, and so I think fundamentals always. You can build a case on the fundamentals, but if you're looking at silver day to day or week to week action, you got to follow more technical, because the fundamentals has always been right. Fundamentals never really dictate the ultimate peaks and bottom of a market. So I see that, and but the question is how much of that is being factored in. We don't know. I don't know. So again, going back to the technical trend, is silver has got to stay above 28 by Friday's closing. And if that's the case, Chris, we're gonna reminisce a month from now. I could tell you that if silver able to close 28 on a Friday, 6:00 p.m., then on a Monday, Asian Open is gonna go. It's gonna be ready to go, because all the technical funds will see that as a clear sign that the hurdles, that it will see a sign that the hurdle has been cleared.
Yeah, although John, let's maybe a slightly different twist on the question, not giving legal financial advice, but let's say, hey, you're my friend, and I say, John, this number, I don't know what happens tomorrow or next month, but if I just sit there and hold my physical silver and I have shares of companies in the silver space that are designed to stay in business, I mean, would you say that it's easy almost for the people who are holding things long term while we look at the debt load really, and exploding?
Hey, Chris, let's be honest about it, right? For people who are holding it for long term to 5 to 10 years, will not be glued their house themselves on fucking on the front of a Kitco screen every 5 minutes. So we're short-term guys. Let's be clear about that, Chris.
Well, we're all humans. even the times where I haven't had call options floating around there.
You know what, Chris? Let me make a couple of
often.
bearish case, because I mean, I'm sure you can talk to a lot of the guys that are talk about silver go to $100,000 or $500,000. I think the counter arguments for silver bull, which I think is less by the day, because everything is a pendulum, it's a weighing machine, right? There's always there's always shades of grays and blacks and whites. I think so. I think the first one is this, Chris. If you look at GameStop, I was quite shocked at how the Wall Street and Washington are talking to each other. It's a 20 billion, a hedge fund is out of a $20 is a $10-15 billion hole. And then all of a sudden you got Elizabeth Warren talking about Reddit should be investigated, right?
Rascals out there.
So, well, then imagine if JPM is really in trouble, like the Ted Butlers, and is saying that the commercial bank's going to be taken out and clean slate, and all of them is going to go bankrupt and all that stuff, and that there's a lot more silver shorted than what is being disclosed, and all the commercial banks is going to go belly up according to quote-unquote insiders of these commercial banks at JPM and HSBC and whatnot. Surely, right, they would have let the powers know. And if somebody's going to step in on GameStop and halt the GameStop trading, well, how far would they go to save the commercial bank? And by the way, Citadel is a private hedge fund, and we're talking huge commercial banks that are too big to fail. So I think that's one area where I was really very surprised to see how close knit, to put it mildly, of the hedge fund industries and the Washington D.C. And now it comes as no surprise. And money's not easy to make, and why these billionaires are consistently outperforming, right? It's almost like as if they position themselves properly and then make the call to tell the Fed to turn off the tap for a couple of months. So I think that's something just keep that in mind. The other point I can't remember, I'm sure will come back to me, because I haven't had a good diet today. I haven't eaten.
Oh, that's all right. I know it's you're late in Hong Kong over there. Although, John, this is a rumor I heard. Maybe you can confirm or deny. Any truth to the rumor that Goldman Sachs is just doing a corporate merger with the CFTC? No, I'm just kidding, everyone. We're just having a little fun. I'm sure the CFTC is completely independent and is right on all these things that John and every other guest on my show have
like
raised.
The Citadel is calling the SEC, well, the JP Morgans will be calling the CFTC. It's analogous. It's the same thing. And then the Fed and U.S. Treasury essentially is one of the same entity. So we're just, quote the Frederic Bastiat, the French, written the book The Law. I think it was back in the 1700, 1800. All the republics started with nobody plunders nobody, and then maybe 5-10 years ago is somebody plunder some people, and now everybody's plundering everybody. And that's just the world that we live in. And again, I would just say that watch the $27.50 level. That is going to be a marriage of fundamentals with technicals, and that's where the train's going to leave the station.
Well, that makes enough sense to me. John, a couple minutes, because we got a quick update on Silver Elephant coming up. I think you're going to stay tuned and see that myself. These guys rounding up 300 million ounces of silver in the ground. But one thing you touched on before, I think people would love to hear your perspective between SLV and PSLV, especially with a lot of people new to silver. And I'll mention John's running Silver Elephant. So you know how to read through legal documents. You've talked to lawyers. You've seen a lot of the tricks in the game that are out there. What would you pass along in a minute or two to someone who's wondering if these are the same?
Okay, yeah, Chris, couple of points that let's come back to me about another bearish case for silver. Besides the cartels seem to be completely going without abandon to try to calm the market and resume some sort of normalcy. If they can they can hold GameStop, they could do a lot of nefarious activities. The second bearish case against silver is if you read Brett Johnson's milkshake theory, it does have an element of truth to it that the world is being more exposed to shorted the dollar more than ever, and it's a dollar standard, and all the dollars created as somebody's IOUs. So that any given point in time, if the Fed want to squeeze the dollar for the upside, they can just talk about raising interest rates, put a squeeze on the dollar, and the dollar will go up, and that's going to put a tap on silver in the short term. So I think there's still a lot of possibilities for the powerfuls to put the temporary hold on silver. So it's all a matter whether they want to let the silver market run or not. And the only way to do that is to see what the market is, as it was back when it was silver $17. And because of all the activities happening, when silver does take out, I think it will go. You want to sell at 30, buying at 28. Once you go to 30, you just gotta sit and watch the movie. Now on the PSLV and SLV, it's gonna hopefully get addressing 2 minutes. On the SLV and also PSLV, what is supposed to happen is if the spot silver goes up, then somebody would have shorted the market, take the proceeds, and then go and buy the physical silver. So one SLV, by definition, one SLV or PSLV, just talk ETF in general, okay? That the shares can only be created when there's a legitimate ounce of physical silver, certifiable, being added into the vault and being counted into the vault. So the only way to do that, there's only one way, Chris, is that when the silver spot is exceeding the share price, just say an ounce of silver, if silver went to 28 and SLV is trading at 27, so somebody was shorted, if SLV were to run ahead of the spot price, so if SLV is 28 and silver is 27, then somebody would short the SLV at 28, take the $28 and go and buy an ounce of silver at 27 and pocket out $1 difference. That's how it works, Chris. And you have what, $1 billion, $2 billion of buying SLVs and PSLVs. That is supposed to happen. But instead, I believe what happened is literally guys would just issue the shares, SLV, and get the money. So what happened is instead of shorting SLV, take that money to buy an ounce of silver, and of which then the share will be issued when the silver goes into the inventory being counted. What is happening, Chris, is when there's volume SLV coming in, the shares is issued, and then they were counting on silver to be delivered at some time in the future. But then if silver keeps going up, spot goes up, keeps going up, well, you issued an ounce of silver, you issued a share for $27, you're taking that 27, but you couldn't buy it until 32, right? Or 33 or 34. Well, guess what you're gonna do? You have to call the power that be, say, hey, like I'm stuck here, right? So they have to engineer a short for the price to be below 27, so then they can then buy the share back and cancel that share that was issued in the first place. But a lot of times you wouldn't do that. Then what happened is you have less silver than the number of shares issued. And I think that's exactly what's happened with SLV. And will continue to happen because the price of SLV is tracking spot too closely to be even remotely possible. It's just not possible, Chris. So in fact, what you should see for PSLV, as I predict in the future, is that PSLV will run ahead of the spot silver price, because nobody dared to short the PSLV because they know they couldn't take that proceeds to go to the market, physical market, to buy in order to cover their PSLV share position. So for a genuine ETF like PSLV, gradually you should see that it start to trade at a premium because there's no physical available silver to be delivered. And nobody is willing to short, to arbitrage in the market because they know they get the money, but physical silver is not available. The other thing is, Chris, you've seen some of the bullion commercial banks in London, they're closing their business. It's like Scotia. And you wonder, why is that? If the physical market is so robust, why wouldn't you should be doing more physical trades? Well, the reason is all that silver in London, which is maybe a billion and a half ounces, they're not available. They're totally allocated. So what you have there, Chris, is you have these commercial banks that are just paper flipping with each other, knowing that the silver is never delivered. The silver is never to be delivered for even a spot market, Chris. That's what's happening. But people are getting afraid to even do that, because they know there's no silver to be delivered. So that's why these silver in London market, they're not available. And that's why, Chris, they're increasingly going to the COMEX for delivery. Why would somebody go to the COMEX and pay 10 or 15% extra, right, for near month delivery for silver when the spot is trading at 7% discount, when if they could go to London and buy the physical at the spot price? And the reason is clear, because physical silver is not available in London at the spot. It doesn't matter what the volume is telling. It's all garbage. So they had to resort to go to the COMEX to get the silver, even though the COMEX future is trading at sometimes quite a significant premium, as we witnessed back in March. So eventually what you're going to see is the COMEX market, the gap is going to continue at a premium to spot. And also the PSLV is going to gradually trade at a premium to spot, because the spot is not accurate. And people are afraid to arbitrage, to short these instruments, to buy into, to close this gap on the spot, because spot is symbolic, Chris. It's a little longer answer than 4 minutes. Hopefully it's beneficial.
It's perfect, John. In fact, the old equity options market maker in me was so impressed by your knowledge of a short squeeze. I'm going to go out on a limb, and I see one of two things. Either A, Jeff Curry of Goldman Sachs, who's also knowledgeable about short squeezes, is your broker, or B, which I think is more likely, unlike Jeff Curry of Goldman Sachs, you actually read through the prospectus changes that he didn't mention when he went on CNBC on February 4th, the day after they changed it, where they John, I appreciate, and that's what I love about you, and I love people who run companies in the silver space that are actually aware of these things that the bankers don't tell you. John, all right, we're going to run a little bit over. That's weird that they would put in the prospectus of one of these trusts that large banks with substantial short exposures to silver could create a situation where the demand for silver may temporarily exceed the available supply that is acceptable for delivery. So,
Chris,
John,
I don't even read into it, Chris. It like just common sense would tell you. The common sense would tell you. I already explained to you. There's just no way these tens of millions of SLV and PSLVs can be issued at a whim, and yet still be tracking so closely. I mean, who in the right mind would be shorting the market to go to the spot to deliver, right? It's just physically, mathematically impossible. And I was a little bit actually surprised of the honesty of their disclosure, because I mean, there was a lot more stuff going under, like there's a lot more stuff there. I mean, I wouldn't even read it, because the common sense would tell you that what they're doing is a mathematical impossibility, Chris.
Well, I agree.
Oh, by the way, same with the position. Another thing, Chris, if you want to talk about disclosure, if you go to I used to track this commercial short position in silver with CFTC. Again, just a lot of gibberish, Chris. I for a second don't believe. Like, if you look at the commercial short position, according to the CFTC report, they've been steady at around -80 to -100. Are you seriously to believe, Chris, on a daily volume of 300, 400,000 contracts, although that probably 20%, 30% is short, that only the short position is only at 100 and has not moved at all, Chris?
John, it makes complete sense to me, although you said anyone with common sense. Perhaps Jeff Curry of Goldman Sachs can see if you could be his broker, or at least tell him about this deal of Silver Elephant. You have some new drill results. So I'm going to wrap up here. They can find that out at silverelephant.com, or you can just hang out for a second and hit that subscribe button, the notification bell, and we'll see you in a minute.